Hi, good morning. In today's session, we will talk about cotton complex, its demand, supply, price, trend analysis. Let's have a quick overview. Last year, we saw cotton prices have jumped more than 65% after breaching 10 years long silence. And this year too, it is notching higher and likely to remain firm. If we talk of the cotton's performance of last year in domestic market, it is mostly up by 65% or between 60 to 65%. And if we talk of last quarter performance, it is up almost 30%. This year so far is good. We have a performance of 4 to 5% in various varieties of cotton. Even ice prices are also reacting in the same way along with the MCX price. Supported the price movement last year were excessive rains, delay in harvest, delay in arrivals, and strong pent-up demand post COVID-19 first lockdown. Let's have a quick look on the key factors which are prevailing in the market and which is likely to impact the price behavior in the coming weeks. World cotton production is likely to remain at last 4-year average level. If we look at the cotton balance sheet, it's in million metric tons. World production for current crop year is likely to be 26.5 million tons, which is 9% higher, no doubt, than last year. If we see production figure, prices would have fallen, but that is not happened because if we see last four consecutive years production, it is more or less similar kind of a production happening. So certainly with strong pent-up demand, if we are having a bit of the higher production, we need to see how ending stock would be. If we look at the ending stocks, then we will have a more clarity. Ending stock was 21.18 million metric tons in 2019-20, and since then it is falling. Last year, it went down to 19.29 million metric tons, and this year, despite 9% higher global production, we will have a tight or lower ending stock than last year. It would be somewhere close to 18.67 million metric tons. If we look at the demand pattern, then we will have clarity why this ending stock is falling and will fall this crop year. See, world consumption for 1920 was 22.44 million metric tons. It went up to 26.33 post uh, COVID. We had seen strong pent-up demand, and I pent-up demand will spill over to current crop year as well. That's why we are having a higher figure of 27.06 million metric tons for this crop year. To the poor quality and Coming to the poor quality and production, late rains due to La Nina and pink bollworm due are the main incidents due to which we had a poor quality of crop this year and production. Now we will have a check on cotton and cotton seed arrival this crop year so far. Cotton arrivals from 1st October 2021 till Jan 10th, 2022 is higher by 31%, and if we talk of cotton seed arrivals during the same period, it is actually 68% lower than last year same period. See, prices have gained due to better demand from North India. Export demand is also seen robust as of now. Next factor is GST relief, which is given by the government to support the cotton yarn prices, is actually failed to support the market sentiment. Announcement of deferment of scheduled GST hike from 5% to 12% is failed to support the cotton yarn market in India, especially in North India. We talk of the hedge fund activity on ICE exchange. We have seen they are aggressively buying this commodity, and their speculative interest has upped recently. It means they are carrying their position of last year this year as well. Now we will have a quick history of cotton price movement in ICE futures since 1970 to have a look how it has performed historically, especially in last 50 years. See, this is the cotton monthly chart since 1970. In a bear market, it found support around 30 cents most of that time. And if we talk of last two bear cycle, which we had in 2008 first, it found support somewhere close to 40, and in last bear market, it found support in 2020 at near 48 mark. And if we look this historical chart, it is clearly depicting 90 cents to 100 cents whenever prices actually reach to these level, which is turning off it into the resumption of the long bearish market. If we see the history, there was exception to it. Once we had in 1995 when prices popped up above 100 mark but couldn't sustain after 2 3 months. Again it went down to the range historical range, which is 30 cents to 90 cents most of the time. But we had an extraordinary year in 2011-12 when prices had a sparking rally and moved to a historic high in the ice and made a high of almost 220 cents in March 2011. After 10 years of bear market, prices have actually breached once again this congestion zone and inching higher in a very strong note on a monthly chart, which is depicting there could be a positive performance in the months to come. And if we see the super trend value on a monthly chart, it is clearly saying as long as prices are above 85 cents, major trend of this commodity would be higher. And if we see historical performance as and when price turn bullish, it normally remains 2 to 3 years time frame. And if this assumption will go right, and we believe that last year was the beginning of a bull rally, then certainly we will have positive return in 2022 before bear market will start once again, because higher price will attract more farmers to actually uh, shift to cotton crop from their old crop, and that would result into of late higher production that normally happens in agri commodities. This pie chart reflects India is the world's major producer, and afterwards China. Both accounts for almost 50% of the world cotton production. And if we see the demand side, major consumer of cotton is China, which consumes around 8.7 million metric tons, followed by India, which has a demand of about 5.62 million tons. Now, if you see cotton ice march, it's strong bullish and it is likely to remain firm in short term as well, unless prices will close below 106 cents. If that will not happen, most likely 118 or higher trajectory would be seen. Because of the imposition of additional margin in domestic exchange and fear of the ban of cotton from the derivative trading, we have seen some actually excessive volatility recently, due to which cotton in domestic market has turned from strong bullish to bullish. But we believe as long as cotton, if we talk of cotton, if as long as it's not closing below 33,987, trend would be on higher side. Cotton MCX 5 future, it will remain strong unless the prices will close below 32,998. If that would not happen, certainly this upper range would be the immediate target, and we believe 38,000 to 40,000 will come because volatility is very strong in this counter. And if upside will continue in a short span of time, we will see higher price movement. Cottonseed oil cake is bullish, likely to stay firm. If you see the mountain chart along with the price averages, it's only below 5 DMA, which it has fallen recently. But if we see the price movement since second half of the December last year, it is on the rising path, and we believe it's a short-term phenomena. Once again, prices will move above 5 DMA and will turn strong bullish. And we believe as long as prices are not closing below 40 DMA, if we use DMA as a trend reversal point, then certainly dips would be limited and it will again resume the uptrend. See the cotton MCX performance vis-a-vis cotton ICE performance, it is having very strong correlation as of now, moving in tandem. And we have seen after recent rise, even price movement has actually turned sideways in both the exchanges. Historical chart we have already talked. If we see the seasonality, it is saying January is typically positive month for cotton in India and Indian MCX and ICE exchange. February bit marginally down, March marginally down, then we have April positive months. So seasonality is not actually depicting clear trend of cotton. So if we look at the seasonality, we are not able to make any consensus. But based on the current demand supply scenario and based on the other parameters we follow, we believe a strong trend to continue. Uh, we have a detailed disclaimer in front of the screen. Whatever we spoke today, it's our view only, not any kind of recommendations. Thanks for watching the video. Have a good day.